Coming up, we obviously have that big rate decision coming up at 2, and then the Jay Powell news conference. What's your expectation for the market day ahead?
This could be one where we get a bunch of bumps in the road. Look, we've got a mix of earnings coming in, as you noted, and some are good, some are bad, as we saw yesterday after the close. And we've got this bumpy ride here when it comes to what the outlook is from the Fed. Powell may try to strike a balance between noting some FOMC members see another hike at the next meeting, and also noting that inflation has receded. I think this is the last hike from the Fed, which is also widely expected by the markets. That's why, as an investor, I'm focused on the European Central Bank. Tomorrow, the ECB will almost certainly raise rates by 25 basis points, and the market expects another one in September. I don't think so. Inflation's cooling just too fast in Europe, and recognize that valuations on European stocks are at 12 times earnings, well below their 10-year average. So signs that rate hikes have come to an end could support valuation gains for European stocks.
Jeff, you're jumping ahead a bit. We really want to focus on today and obviously our central bank in this decision. I want to bounce something off you. This is from Bespoke Investment. Some really interesting historical research. It shows on the average performance of the S&P on Fed days since 1994. When you look at that, during the Ben Bernanke tenure, the best performance, an average gain of 0.5% on decision days. When you look at Jay Powell, take a look at the part where you see Jay Powell. We actually see a much less of a performance, a 0.1% rise highlighted by late day sell-offs. Do you believe if we do see a hawkish Jay Powell, I know you said you think this is the last hike, but if we do see a hawkish Jay Powell, does that lead to a sell-off? Because I think a lot of people are thinking like you are, this is the last hike.
Yeah, we've seen enough soft economic data, including the service PMIs that just came out earlier this week, that are suggesting that the service sector of the economy may be beginning to join the manufacturing sector in a mild recession. So those concerns, compounded by further rate hikes, would probably put more pressure to the downside on equities.
All right, so we were just looking at the earnings wall, down 7.7% year over year, but actually 7.7% above estimates. Kind of an interesting dichotomy there. What do you expect for the rest of the earnings season, specifically the earnings that we're getting today after the bell? A company like Meta, is that going to be a big market mover, or are people looking for something to put a crack into this AI-fueled rally?
Well, I do think that there's a lot of hopes riding on the AI-fueled rally. And so definitely the market in the U.S. is vulnerable, just given the concentration of leadership in those mega caps. So I do think that's important. But beyond just one or two names, I think the trend here is listening for what's going on the job front. We've heard from businesses this earnings season so far, more talk about layoff discussions, outnumbering those discussions about the inability to hire or labor shortages. That suggests we could see a turnaround in the labor market. If we hear more of that, that could raise some concerns about the consumer confidence that's been underpinning some of this rally. So I do think that there's more than just a few names that the market's going to be focused on in terms of what they're hearing from business leaders.
All right, we want to look ahead to the market day ahead. What is your WEX word of the day?
My word of the day is El Nino. Weather usually doesn't have much of an impact on markets, but that could change in the coming quarters as the potential for extreme weather highlighted by El Nino could cause significant economic disruptions. It comes at a time when the economic environment is already vulnerable to shock. We're seeing extreme heat, the hottest week ever in the first week there of July. We're seeing airlines using more fuel to beat that heat. Hospitals in the Southwest are seeing the most emergency room cases since the pandemic. Low water levels in Germany are making it impassable for cargo and coal. Rivers in France are too hot to cool nuclear reactors. So there are a lot of factors here. El Nino could result in disruptions of food production, movement in the price of energy, insurance losses. Quite a few factors here. We want to keep a close eye on it. El Nino is potentially a risk here, given the vulnerable economic backdrop.
Very interesting. We don't get a lot of weather-related WEX words of the day. So with today in mind, is there any sector or any stock that you would look at right now that might be vulnerable to some of this severe weather disruption or just the El Nino disruption?
Usually it's the material and the energy sectors that are most impacted. And we can see that, I think, in some of the energy stocks. We'll have to see what happens with fuel and coal and a number of other commodities as they try and get to where they're needed. We're already seeing rationing of some electricity in some parts of Europe. So I want to focus on that. So this may be more of a Europe issue at the moment, but certainly beginning to affect the U.S. as well. Look for that to increase as we get more into the El Nino effect this fall.
All right, Jeff, we're going to wrap things up. But just for today, choppy before the decision. Do you expect things like this Dow rally to continue today? What's your outlook for today specifically? A lot of people trying to make some moves ahead of this big decision.
Almost certainly on Fed days, you get a market reversal. You get an initial knee-jerk reaction on the statement, on the initial comments, and then a reversal from that. So be very careful trading around that 2 to 4 o'clock time frame today.